in most cases, all you need is the daily candle to trade, right? And in this video, firstly, before I go into deeper details, firstly, this is a trade that just closed a few moments ago. So as you can see, it's not much, but it's a 3-hour trade here, right? As you can see, it's a 3.32 trade here. And in this video, I'll just break down um how I cut this trade. It's a very simple method I used. But firstly, I come from the higher time frame, right? So let me switch to the higher time frame and show you how we got to this area. Now, before we even go further, here is the before picture, so you can see that I really took this trade. Then, as you can see, the after basically. Now, this is the daily chart, right? And the first things first, market structure and direction, right? Now, as you can see, market, what is market currently doing? Market is in a clear downtrend for now, right? Why is it in a clear downtrend? Okay, so first things first, let's if you use the trend line tool, this trend line tool here, right, you would see that the market has been trending downward, right? That's basically what it has been doing, right? Clear? Now that is one way, but I usually don't use the this trend line tool for such analysis. So if you watch here, market has actually, firstly, it has broken how many lows? It has broken this particular area, right? It has broken that particular structure. In fact, that was the first change in character. Then the next one is here. It has broken another structure, like multiple structures in this particular area, right? Then also it went up, but it couldn't continue going up, so it broke another structure here. And we see, right, it has broken another structure in this particular area. All right, so this has shown that market is quite bearish. But why did I take a buy? You'd ask, why did I take a buy when we are in a clear downtrend? Okay, so this is what I saw, right? So Monday's close, if you watch here, this is Monday's candle. So Monday's candle actually was a huge bullish candle, right? As you can see, it was a huge bullish candle to the upside, right? Now that is one, and it broke a particular SBR, right? That is this area. This support turns into a resistance. Well, was actually broken through, right? This is an SBR. Now, how do we draw an SBR? When I say SBR, it's basically a key level, and this is what I'm actually implying here. So you'd have a market do something like this. It will do something like that's the support. Then it does something like this. It breaks through, right? Then it continues, right? Now this particular area is a support and it has been broken through. So now it turns into a resistance from this particular area, because this is the support initially, and it breaks through and this becomes a resistance now, right? So yeah. Okay, so let's move on. So that is one thing I saw, but that is not the full picture on what I saw there, right? Now the next thing we would look at is this. Now you'd see that this market is still bullish, and we have what we call a draw on liquidity, right? Now this is the draw on liquidity for this particular market here, right? This is the draw on liquidity, this particular region. That's the drawn liquidity, right? Now that is one that in fact that's the most important thing I saw when I was actually taking this trade, right? So immediately I saw that okay, because market moves based on liquidity. That is, it goes to the swing points to grab external liquidity, then it comes back in to grab internal liquidity, right? So that's basically what moves the market, liquidity, right? I hear some people say, "Oh, you're my liquidity." Oh, geez, we are all liquidity to everyone, to one another. It's an open market, right? Everyone is selling, everyone is buying. If nobody's agreeing to your price, then you might as well not be able to sell or buy. So you are liquidity whether you like it or not. Now, continued. So the next thing I did was mark out the high of that day, which is a Tuesday. I mark out the high, right? After marking out the high, I also mark out the low, which is here. But the low is usually not that important to this thing, but I'll show you still. Right. So now we will head on to the 1 hour time frame. Now this is the 1 hour time frame. We head on to the 1 hour time frame, and because that is our entry on time frame. This is just it. It's not anything like rocket science. Like, it's not difficult, right? Now, how did we take this trade? Now that we have marked our closing and the high and the lowest point of the market for that trading day. Now that we've marked it, what else are we looking for? This is what we are going to be looking for. So if you watch here, you'd see that this is the low, this is the high of the market, this is the highest point the market actually got to for Tuesday trading day, right? Now, which candle is the last candle? Which is the last candle for the day or for Tuesday? This is the last candle. Where is it? Okay, that's it. That's the candle, right? Let me mark it out so it's very clear, and I will also take out these multiple markings I've done on the screen. I don't like my screen this what's it called, looking this nasty, right? Now that is the candle that closed for the day, right? Now that we have noted the candle that closed for the day, we are going to look for our entry. And what is our entry? We just want a sweep of the closest liquidity. That's what we need. Now, where is the closest liquidity? You see, this is it here. This particular A-shaped key level, right, that I marked here. This is the A-shaped key level. So if you watch, we just have to drag it further, right? Oh no. We just have to drag it further, and that'll be it, right? Immediately market cleared that liquidity. That was all we needed. That was our entry trigger, right? Then we just place our buys and target the drawn liquidity. But I wasn't too confident because it's actually a bearish market. Because in a bearish market, sometimes you might not really get up to that particular point that you think market will get to, right? So if you watch here, that was actually an A-shaped key level, and I placed it just below because sometimes markets will probably want to get liquidity first before it reverses heavily, then goes back up, and I'm not ready to be taken out right when I am almost at the touch line. So that's basically what I did here, because I wasn't too particular what the market will do, since it's a bearish market, right? So this is basically how I framed this particular trade. It's very, very simple. It's something that you can probably just do within a matter of a few minutes. So if you've enjoyed this video, I want you to like and subscribe to the channel, and I'll do more interesting videos down the line. In fact, I'm actually targeting a very, very high RR trade, but hopefully if it's tags true, then I'll also make a video for that.